Today, we welcome John Sutton, who is the co-founder of Mansion Group, a PropTech meets FinTech company focused on building the next great hospitality brand. Prior to founding Mansion Group, John spent 12 years with Red Ventures, most recently as president and chief digital officer. Red Ventures is likely the biggest media company that most people have never heard of, but they tout brands like BankRate, The Points Guy, Healthline, Lonely Planet, CNET, and many more. John is also an active investor and advisor, working with companies like Opendoor, ZPG, and venture and private equity investors. John, really excited to welcome you here today. Thanks for joining us.
Yeah, thanks, Daniel. Thanks, James.
So why don't we just jump right in? And you started your career early in digital on the SEM and SEO side of things, moving into over time becoming the president of Red Ventures. Can you walk us a little bit through that journey?
Yeah, I mean, it starts pretty early days, so I won't bore everybody. But probably like you guys, I was dabbling in technology in the '90s. I helped my dad; he had a small electronics company. I helped bring that online, and that's when I really learned SEO and SEM. Probably you guys don't even remember the Alta Vista days and things before your times, but that's how I really got started. When I graduated college, it seemed like evident to me that I was pretty good at that, and it was hard for anybody to have more experience in Google AdWords than I had because I've been doing it since like the day it came out. So I parlayed that. I was participating in blogs and things like that, and got into what was the biggest space at the time was for-profit education. Was spending, hundreds of millions of dollars. This is the University of Phoenix heydays, and I started there, kind of doing lead aggregation, SEM, SEO for a big competitor of University of Phoenix, and hated that job. And I got to recognize, like, you guys probably see it too, but for me, it was not a lot of people understood what we were doing and how we were doing it, and they still, especially in big corporations, wanted to hand it off to an agency versus do it in house. And I ran into that like full steam, even though we were crushing it with like a small team. And so I quit. Probably not in a great way because I was 25 years old and I was kind of pissed off. But I quit that job, started my own agency out of Chicago, drummed up some business. It was called Random Walk, like a random walk down Wall Street. Uh, Started that, and I was lucky enough. I was doing what you do if you're in the agency world, trying to drum up business and giving a speech at PubCon in Las Vegas. And I met a guy named Rick Elias, who most of your listeners probably don't know who he is, but now a multi-billionaire who started Red Ventures. I thought I was selling him. And one thing, if you know Rick, he's the ultimate salesperson. And so I thought I was selling him. Turns out he was selling me to come work for Red Ventures. And long story short, when I joined in 2009, Red Ventures was online, I would say, lead capture. But the unique part of the business model was they were paid a CPA, almost like an affiliate, but they were doing it in a telesales environment where there was high LTVs. So like DirecTV was a good example, multi-$100 kind of CPA, but you had to like activate the box in the person's house to get paid. And it was an interesting model. I kind of came on to help build their digital capabilities. They weren't doing much in SEO. They were dabbling in SEM, but maybe, a couple $100,000 a month. And pretty quickly, we actually at one point in time were doing more online sales than the brand itself. We were like directvdeals.com, and we were doing more than directv.com was doing, and started getting calls for like, how are we doing that? And we got lucky, and I'll tell you the story of how I ended up as president, I guess. But basically, when I joined, there was like 87 people at the company. When I left, there was north of 5,000 people. So it was different time. We were like in a strip mall in South Charlotte, and we got a chance to be the brand for a company called Clear Wireless. We're kind of first in the 4G. They let us take over their kind of main brand experience, and we crushed it for them. They eventually sold to Sprint, and the rest was kind of history. I was leading the digital team maybe like 6 months after I started Red Ventures, but it was 8 of us or something, and then we just kept building and building that. And the history of Red Ventures is it was really an agency business with a pretty unique model. Like we put our capital at risk, but we got the upside, and that was really the core of the business until in earnest 2015. And that's really when we started being more acquisitive. I don't know exactly when I became the president chief digital officer, but I built a lot of our product and technology teams in house, and when we started being more acquisitive, I took on the role of basically like digital strategy for an acquisition like BankRate, which was a public company, and it was like the minnow swallowing the whale in 2017, and did a bunch of different things along the way. But that's a bit of the story.
Crazy. And like today, I mean, Red Ventures, I think like most people interact with a lot of the sites that you guys own. They probably don't know it that they do, but like it owns, Points Guy and BankRate. Like today, is that agency style business still a big part of it, or is it kind of moved to being like publisher platform kind of ad business?
I think maybe it was a natural pivot or maybe it was unnatural. But one thing about Rick, who, the Red Ventures culture definitely breeds or bleeds kind of Rick Elias's mentality on a lot of stuff. And I think he always wanted us to be able to control our own destiny. And in the agency business, you're like one phone call away from, massive changes to your business. And I think the model that the Red Ventures created helped lock that in, but it was still a risk, right? Like your listeners probably know, but like as the ad tech was getting better, the margin between how our team operated versus how internal teams could do it themselves started to shrink. And so we had to kind of add new capabilities. So it went from just SEM to like, let us help you on content strategy, to let us do your paid social, and thus the Ampush investment in I don't know, 2015 or something like that. But eventually we said, we need something where if it's big enough to the partner, like it'd be very hard for them to walk away from our agency business. And that was a bit the strategy. So with BankRate, for example, the idea was they own the Points Guy, but they also own creditcards.com and a bunch of assets that were pretty material part of the business for credit card partners. And one of our largest partners at the time was one of the participants in the marketplace on the agency business. So that agency business does, long story short, again, still does exist. It's called Red Digital. So they have a pretty amazing team. They're still able to help, especially mostly like large enterprise brands that just can't move quickly, and they're so embedded in kind of the old mindset of an agency that kind of does stuff for them that they don't recognize that sometimes like pace of innovation and speed matter more materially in the digital space. So Red Digital helps a lot of brands, still to this day, still a business, but the media side of the business is definitely the behemoth now compared to the agency side, with CNET and BankRate and Healthline and Lonely Planet and a bunch of other assets.
And how did you, I guess, convince Rick and the team that like this was the shift in model that was necessary to go from traditional agency to now we're going to own a bunch of media properties and that's going to be the business?
Yeah, interesting. Red Ventures never took. It was a bootstrap business, and so talk about like bootstrap founders with Jesse and team. When Red Ventures finally took outside capital in 2010 from General Atlantic, it was all secondary, just because the business was generating a ton of cash. Um, but interestingly enough, I would say we were pretty risk averse as well. So we got somewhat lucky. There was a friend of ours named Patrick Gavin. Some people, if you're in SEO, might know him. He's a bit of like, I don't know, crushes it on creating SEO assets from 0 to 10 at least, and then kind of sells them and moves on to the next category. But he had some assets. Reviews.com was one of them, and another site that was, geez, I can't even remember, the Simple Dollar, like a tiny kind of competitor in the finance space. We wrote a very small check to acquire those assets to kind of test it, and literally, I think we bought them and 5x revenue in 6 months of the financial assets we bought. And the biggest difference was, I think it's the mentality. Like at Red Ventures, because of the way we grew up, the number one priority for us was making sure that like the companies we were helping acquire customers for, we're getting great customers, we're growing, we're super happy with what we were doing. And we weren't selling display ads like at Red Ventures. We weren't even participating in a lot of the stuff you guys know more about than I do. We were driving customers, and like whatever the mechanism was to get those customers, we would try it. And so when we bought Simple Dollar and just flipped it and said like, we're not doing programmatic ads anymore, like we're doing direct deals with here's who we're bringing to the table, major financial players. Being in Charlotte kind of helps. And like when you start telling them we're not selling you clicks or impressions, just pay us for customers, and oh, by the way, like pay us different if you're willing to for higher value customers or lower value, most of the CFOs are like, sure. But you're betting on yourself when you take that risk. But that was kind of the unlock. So the BankRate deal really came to fruition because our M&A team saw what M&A is a loose term. There's like one guy on finance at the time, and he saw what we were able to do with reviews.com and the simple dollar, these kind of tiny assets. And he was the one who brought BankRate, which was a public company, which, man, that was a beast. Like, brought it to Rick and said, I think we should buy this for like $1.3 billion. Let me just say, like, the largest check we had written for any asset before that was like not even a tenth of that, you know what I mean? And that was the epitome of taking a leap of faith. But we got the deal done after kind of quite the extended period. And then that playbook worked pretty well as well. Like, those assets within, I don't know, 6 months, 12 months. I mean, it was a big company to change the dynamic of and the culture. And I'm sure there was, pain felt on a bunch of different fronts, but economically it was a huge success. And so we started looking at other verticals where we had kind of great relationships, good customers on the company side that we could say, hey, now we have, the most eyeballs was always the goal. Like, we wanted the asset that was the dominant player if we could get it in the space. And if you know anything about SEO, it's a lot easier to rank content when you have like a 90 DA site like CNET or Healthline versus try to build it from scratch, And I would say the Red Ventures way is definitely more of like get there fast than build it over 5 or 10 years. Like, it's not a startup incubator. It's definitely more of let's make it better and iterate type of company.
A quick break from one of our sponsors. Meet Market, your AI assistant for e-commerce marketing. Market isn't just another growth tool, it's a member of your team, helping you keep a pulse on your business and trained to save you time and make you money. It's also co-founded by James Barrow and myself. Visit us at withmarket.com. Now back to the podcast.
Yeah, so I think you probably answered this question in some ways, describing like how you guys were different. But during, I guess, like the vintage of Red Ventures versus some of these other like huge digital media companies like BuzzFeed, Vice, Fox, etc. Like, that is like not those guys do not have, I think, great outcomes by most standards. And so, like, how do you attribute kind of the fact that you guys were able to build a digital media business in Charlotte against these guys that were like backed by giant digital media behemoths in New York? Like, it's a pretty, like, on the surface, not obvious sort of outcome.
Yeah, I mean, I think a lot of it, I'm not sure if the editors and the content creators would love this, and they probably didn't love it when Red Ventures was the acquirer. But, our mindset was we definitely kept integrity of the content, but the primary focus of the business was the business of how do we generate profits. And to us, that meant how do we make sure that our customers, those who are paying us money to acquire customers on our site, are happy. And I think, like, bringing that mindset to bear was the biggest difference. I'm not an expert in those other businesses you mentioned, but my understanding is like their content businesses first, and that was the primary business they were in, and then they try to monetize that through ways that publishers monetize. And I think a lot of times, like, that little nuance can make a pretty big difference in how you build a business, and like what you focus your energy on. And I think, to me, still think the content's great on CNET and Healthline and BankRate, and I still use the Points Guy and other sites as well. But I definitely know that the way they run behind the scenes is fairly different than the way they ran when we bought them. And I, like, the biggest difference is probably that mentality we bring of kind of the corporate customers first.
And then, those are kind of an older, as James said, an older vintage. Now we've kind of seen this wave of influencers or influencer networks that are a little more direct to customer, that kind of curate their content to a specific audience. What are your thoughts on those kind of being the next iteration of maybe how Red Ventures grew on the media side? Is that different? Is it similar? Like, where do the lines cross?
Well, officially, I retired from Red Ventures in 2021, so I didn't have to worry about this problem. But I'll give you my take on it, at least. And someday, maybe someday, you have Rick on here and he can tell you more. But I think the Points Guy was like an early version of an influencer. Now the brand is bigger than the guy, I guess. But like Brian Kelly, who built that brand, he is, like, in my mind, like an influencer first, and he figured out how to monetize his audience in a pretty direct way by having relationships. I mean, I think a lot of these influencers probably start the same way. And I would say, it's an affiliate deal here and there, and then eventually they get big enough that maybe they have a direct relationship. I think the question for the media assets that Red Ventures owns is going to be like, how do we take what we learned with the points guy, or how do they take what they learned with the points guy and find who those influencers are going to be in the other spaces that we want to continue to generate customers for. Like in the healthcare space, I have to assume there's great doctors and medical professionals that have amazing content that could help drive trust. That's a tricky space. But same with financial services, also a tricky space. I think CNET, they have a ton of editors as well who are like public facing influencers. But I think there's definitely room for Red Ventures to move from acquiring websites or domains that had a bunch of SEO authority, where there's also a lot of inherent risk in that business, to maybe bringing on board. Acquiring is always a weird term when you're talking about like a person, but like bringing on board an influencer who has an audience and who has a voice and has trust, the same way you would evaluate an SEO asset. And I have to assume that Rick and the team at RV are looking at things like that.
Yeah, interesting. And I guess maybe switching gears a little bit from kind of like the SEO driven sort of content direction to where you went after Red Ventures at Open Door. Like, how did you decide you wanted to kind of move into like more of a marketplace sort of platform play versus kind of more traditional like publisher kind of ad supported? Like, what was that whole process like for you to end up there and getting involved in that?
When I decided to, I guess what I say, retire from Red Ventures, a big part of it was the fact that I felt like history was repeating itself a bit for me. Like, we had a playbook at Red Ventures that was working really well, but like we did it in 2017, and then I went to the UK and had an amazing experience and was lucky, but kind of executed that playbook, the agency business, acquire an asset, and along the way, I ran into we acquired a business called Zoopla, with a private equity partner, which is like the Zillow of the UK.
Hmm.
And like I got pretty fascinated with the real estate space, but in, I guess, maybe a negative way, maybe a positive way, which was like it just seemed like technology hadn't really changed the consumer experience, right? Like the corollary I always gave was, it seems like had Expedia decided the way that they were going to disrupt the travel agent industry was to like publish all the flights and then say, let us know if you want us to put you in touch with a travel agent, like, and it just stopped there. Like, it's not exactly a digitized experience, and that's how most of the real estate portals and the real estate industry, like, that's the role that, especially residential real estate, that technology played. And so I started diving a bit into that and seeing if it applied to Red Ventures, and it wasn't a space that at the time RV wanted to get into. And I had been there for 12 years and had a blast. And so I kind of told Rick, I think I want to get closer to the consumer, was the other part. So Red Ventures definitely sits in the middle, like, but has a ton of eyeballs and consumers. But at the end of the day, like, the customer is not actually the consumer necessarily, right? And so I was lucky enough to know a guy named Eric Wu, who was one of the co-founders of Open Door. I told him I was retiring. Wasn't looking for a job. I was actually just wanted to chat about real estate and technology and decide what I wanted to do next. I thought maybe I would start a venture fund, or I do a little angel investing, take that to the next level. Talk to some people who said, like, I don't think you're going to want to do that for a variety of reasons. And Eric said, hey, we're trying to build some new products that aren't as capital intensive. Like, you could definitely help us on some of the things we need to do on digital experience and product technology and partnerships. And so I joined Open Door, maybe from a stock market. My first experience being part of a public company, by the way, is because they had just gone public maybe 6 months before through a SPAC with Chamath. And I think when I joined, the stock price, hopefully it's not correlated, but it was like $20 a share or something. And then I think, now it's maybe $3 or $4 a share, but better than other SPACs, I suppose.
Yeah.
But yeah, I mean, that was for me, I always really wanted to see what it would be like to have a product that was actually like what the consumer is purchasing from us, versus be the middleman between us and another brand. And that's what I was looking for. And real estate, I can tell you more about kind of the mansion of vision, but I learned a ton at Open Door. And I knew if I was going to start a real estate company, it'd be like you guys trying to start an ad tech company and knowing nothing about ad tech. Maybe that could be a good thing. It's a lot riskier than if you know a decent amount about the sector. And so I said, like, I got to get smarter about real estate. Open Door was, in my opinion, like one of the very few companies doing it at scale, maybe other than Zillow or someone. And I had an in with Eric, and he made me an offer. I said, sure. So I learned a ton about. I mean, they were at one point in time buying, thousands of homes a month, and so it was interesting to see their scale challenges and things.
So going from Open Door then to starting Mansion Group, like what was it at Open Door that you were like, okay, now the light switch is on. I need to go do this. I see an opportunity for Mansion Group, and then maybe tell us a little bit more about the founding story and what Mansion Group is.
Yeah, maybe you guys have it as well, but I had invested a bit in a handful of rental properties just to diversify myself. And so I had that even pre-open door, some properties I had invested in, and I always had a passion for building things, I think. And the physical world and design, I kind of had gotten better and better as I, sold homes and things, and kind of realized like what I liked and what mattered and what didn't, and how to go from a empty college dorm room to a house that felt more like a home. And so I just took a flyer one day on a personal property and said, I'm going to turn it into more like a hotel like experience. And so I had this thesis that there was a gap between, I guess, like mom and pop Airbnb hosts or people like renting out their bedrooms and hotels, and like what could be like Four Seasons like experience, but in a house. And I knew it was like a market I would use, and probably you guys with your families. It's a lot easier for me to travel now that and stay at an Airbnb. And vacation rentals existed forever, but the difference was they were only in like vacation
Mm-hmm.
cities. And now you can get a quote unquote vacation rental in Charlotte or Chicago or whatever it is, and it's a lot easier to have a kitchen and multiple bedrooms and stuff when you have kids, if you want to spend any significant time with your partner. And so that was the idea, but it was more just I say like a lifestyle business for me. So I was doing it on the side. And while I was at Open Door, I learned a ton. I think it was a good inflection point. Eric, who was my good friend, was stepping down as CEO. And I stayed on 6 months after that, just kind of through a transition of some product stuff, and said like, you know what, I think I think the time has come for me to try to do my own thing. And so I kind of went down to the drawing board and said, okay, that how do we make that idea into something bigger? And as I started researching it, it was, pretty interesting to take the hospitality brand playbook, the Hiltons or the Marriott, and see if we could build like the next generation version of that. And it starts with like great guest experience and property management, and goes into real estate development and capital markets, and ends with loyalty. And I looked at kind of those three pillars, and we came up with our strategy on how we'd attack them. And that's kind of how we built it.
And today, how many properties do you have kind of in the network? And then I don't know if you also just like, we've talked about this before, but like you guys also have like a sense of like not only loyalty, but like ownership, right? Like people can like earn or buy equity in the properties they love. Like it's a pretty different approach, right?
Yeah, and sometimes different's good, sometimes different's bad. Hopefully, this will be a good one. But we're just getting started, so we have 16 properties now, I think, on the platform. Some are legacy ones that we brought in, but we're just now starting to scale up, primarily in the southeast. But we'll look to expand, kind of market by market. We have our next property launches in Deerfield Beach, Florida. Has like a full size pickleball court in the backyard, kind of beautifully designed. 7-minute walk to the beach type of thing. But yeah, I think one of the unique elements was as we looked at loyalty, and I learned a ton at the Points Guy. I kind of felt like there's a ton of benefits of loyalty programs, right? Like it drives behavior of the consumer, where you want them to stay with you again. You want them to, not go to your competitor. But it doesn't necessarily create brand ambassadors. It almost kind of creates lock-in. And so we said, okay, like what's one step further than from loyalty? And we thought it was, ownership as like the future of loyalty. And you saw it with some of these crypto experiences, which maybe have a black mark, but I think there's some interesting things they were doing. And so we saw what Masterworks and some other folks were doing on like fractionalizing assets that historically, weren't as accessible to folks. And we went through a process I wouldn't recommend unless you don't like yourself, but try to register our offering with the SEC. So we went through the Reg A process with the SEC, and we got our offering qualified basically beginning of October. And what that lets us do is, yeah, like anybody who stays with us, You can earn free shares of the property, but it's not a timeshare. We're turning you into a real estate investor and kind of letting you own an equity stake, so you can earn dividends. You participate in the upside for appreciation, and the concept is, you know, you may not come back to Charlotte ever and stay in our properties. So it's not like we have, 10,000 hotel rooms worldwide, which was another reason why loyalty wouldn't make a ton of sense for us. And we said, like, well, we care more that if you know anybody who's going to Charlotte, you're in a place where you want to tell them to stay there. And yes, of course, we want you to tell them to stay there because you love it, and you probably wouldn't become an investor if you didn't. But also, like, at the end of the day, if James owns a vacation rental property in Hermosa Beach, you know, I'm sure he's willing to say, like, you guys should stay there. And it doesn't matter that there's some economic interest that he has. And I think that was the concept for us as well. And so you can earn free shares by staying with us, but also we have an open market where anybody can buy an interest in our properties and become a real estate investor alongside us. So we invest in every property ourselves as well. So we have kind of capital at risk. Yeah, and we lowered the minimum to like $100. We might raise it here soon, but we also have an accredited investor fund on the side for some of our larger investors. But yeah, I mean, that's our version of loyalty plus our access to capital, I guess.
And you position it as like a prop tech meets fintech, and so obviously your background is so technology heavy, and that's been your experience both on the marketing and digital media side. Where does the technology come into play, and where do you see that over time being one of the differentiators?
I think there's three aspects of it. One is probably boring but pretty impactful, which is on the property management side of things and the guest management side. I think one of the reasons you didn't see hotel brands come to fruition in single family residential is managing kind of such dispersed assets is fairly complicated, especially doing it capital efficiently, right? Like, you have 400 rooms all in one location. You can have one cleaning team and one maintenance crew and full-time people. When you have 15 properties across like 3 different states, that model doesn't work. I think luckily as Airbnb grew, there's more and more solutions that came to bear, but like we invested quite a bit on the property management technology side. I kind of always had this point of view that if you can, creating a vertically integrated model is like the way to approach it. And what I did learn at Open Door is in real estate in particular, you need to find multiple ways to extract margin. And so one big key technology place is the property management side. I think, our reviews, we've hosted over 12,000 nights already across our properties. We've averaged a 4.9 star rating. I don't know if anybody can get perfect all the time, but the goal is perfect. And that's one big investment. The other, I would say, is the investor management side. Hopefully some of your listeners can check it out on mansionlife.com, and not to be a plug for it, but like we wanted that experience to feel like Robinhood. So it's fairly complicated to like run a know your customer check and an AML check and verify your credit status if we needed to, and link your bank accounts, and all these kind of things required a product mindset, maybe not like deep technology expertise per se. But I think we've done a pretty good job with the V1 of that experience. And we want that to keep getting better, just like a Betterment or a Wealthfront. I see that becoming a platform where like you can auto invest, or we can help you diversify into different markets, or we can do other kind of cool things. So I think that will be a big part of it. And then I think the last one for us is going to be around like how do we source deals and how do we know when to sell, right? Like that's pretty critical. And you know there is the MLS, which is luckily there's a feed of data that feeds our systems today. We buy like we make offers on 0.1% of the homes that we see. Part of that is like automatic curation, and again, I think AI and some of these will help us on this front, like better describe what we're looking for, and hopefully the realtors and the Zillows of the world like release some products that we don't have to build that stuff ourselves. But yeah, I think that's the third place. Is it's pretty key to make sure you have the right properties at the right price on your platform if you're trying to build any type of real estate portfolio. And I think that's the place where we today spend the most manpower and need to spend more on technology. But as a startup that has been bootstrapped, like we haven't raised institutional funding yet. I think we're about to maybe go raise our first round, but that's meant we had to decide where we put our dollars to work, as you guys probably well know.
Yeah, and from a just given that like the Airbnb space seems like it's like constantly kind of a game of like just like, oh my god, whack-a-mole with like regulators and like local governments, things like that. Have you found that to be an issue with this? Like, is that like an interesting part of the problem?
Yeah, what I tell the folks who put bigger checks into the REIT, for example, and maybe even retail investors is what I like about it as an investor, and I've put a decent amount of my personal capital into the real estate side as well, is there's definitely the inherent risk that short-term rentals get banned or regulated to some extent, and so we're very thoughtful on like where making sure we know the market and we know that those risks at play. Like I presented to the Charlotte City Council 6 months ago as they were thinking about adopting their new rules, and I don't think it was me, but we got them to remove the restrictions they were proposing on short-term rentals, some of which were crazy. Like short-term rentals had to be more than 140 feet apart, and I'm like, why 140? um, but I think those will keep happening, and I can understand the concerns. I honestly think probably like a lot of tech folks, like regulation would be a good thing for us, maybe a bad thing, unfortunately, for like the people that only have one Airbnb and their house and where they live just doesn't allow it. But for us, like we'll have the flexibility and hopefully the foresight to kind of work around that. And we're looking at other things too. We're talking about launching what we're calling kind of our version of hotels for groups, where we would have a hotel license, but it would be like 4 bedroom units in a building, and kind of repurposed commercial real estate that's not being utilized to its full capacity. But like those types of licenses are difficult to get, but you don't have to worry about kind of Airbnb regulations keeping you out of the market. So I think we'll stay creative. It's definitely a risk and something that we talk about in our SEC offering circular, that if you're looking for 77 pages to put you to sleep, you can go read it.
So maybe on the opposite side of the regulators and governments, how are you acquiring these customers? How are you helping people discover that your properties are the ones they want to stay at?
Well, I think there's two sides to that coin. On the stay side, we've been pretty lucky. Is the online travel portals like Airbnb and VRBO and Booking and more to come. Like we're kind of agnostic. I treat those guys like the way that people discover us, and then our job is once they discover us, and I'm sure the portals are going to fight this battle at some point in time. But like as they discover us, we want them to come back to us directly where possible. So, but yeah, on the stay side, yeah, I would say 98% of our first time guests are finding us on third party portals. The nice part about that experience for us is, generally speaking, it's like $0 CAC, right? Arguably a negative CAC because we're making a profit on the first day that they find us. So that's how we found most of the stays and the guests. And I treat Airbnb like SEO and maybe a little like SEM. Like you need to understand what's driving their behavior, and you could try to understand their algorithm. It's kind of like demystifying quality score. It's like, well, if we said what's the profit per click or per impression to Google and work backwards from that, then you can try to understand like what they're optimizing for. And at Airbnb, it's pretty simple. Like they want people to go from seeing your property and that impression to booking your property, and they want the dollar amount to be as high as possible. But that's always a trade-off, right? Like the price paid and the conversion rate. And so we're a little bit on the higher end, but I think we're attainable luxury. So we're not like $2,000 a night most of the time on our properties. And so, yeah, we play that game. And I think our background and our team's background on SEO and SEM has actually helped us on that front.
Totally.
On the flip side of that coin, though, is the investor acquisition. And that's part where, we're turning our guests into investors. That part I think we're doing a good job as. But in the flywheel is we just need more guests and then we'll have more investors. But in the meantime, we're doing stuff that's not in my wheelhouse, but trying to acquire those people who want access to real estate, folks like you and I who maybe are pretty exposed to technology investments but don't have a lot of real estate investments. So we're doing some like content marketing on LinkedIn, some more, I would say, like I don't know, high net worth investor marketing and things that are not my wheelhouse, but I'm figuring it out along the way.
And is there like I guess two questions on that? Is there in the model, like would you eventually have like non-owned properties on there? Like if I wanted to submit my house to be a rental in by a matching group property, would you support that over time?
It's a startup, so it's hard to say no to any idea. I think conceptually, yes, right? Like what I care the most about with the Mansion brand is, we're not challenging Airbnb and trying to become a marketplace model. I think if there were properties that could be operated under, I call it like the Mansion flag, they meet our standards, our guests would experience it in the same way. Like I want it to be like if I walk into a Kimpton in San Francisco and a Kimpton in Charlotte, they're definitely different, but they're purposefully different, but a lot of things feel the same. And I kind of want that experience for our guests. I think who owns the real estate? Like most people probably don't know this. Like Marriott and Hilton don't really own any real estate, right?
Yeah,
Like
yeah,
they franchise their brand to the real estate developers, and they're the property manager in a lot of cases. And so I like a less capital intensive model. If we could get to that position, I think for now we kind of have the captive model because we got to get the flywheel going. But I think like as over time, just like the Marriotts of the world are a more attractive option to a commercial developer than James' new hotel. I think if we can get to that position, agnostic as long as the real estate kind of fits the mold for our customers.
yeah. Because my wife and I were even talking about like, would we ever like rent out the house for the summer and go somewhere? It's like your renter is such a better, potentially like a more reliable renter, and like there's just like a lot of really good signal out of it. It's cool. And then for the investor side, like I saw like public.com, which is like kind of like a Robinhood competitor. I know they're letting you can now like on their app buy royalties to music, like fractional, like do you see over time that you guys could be like syndicated across these different trading platforms?
Yeah, so Public bought a company called With Otis, and they kind of integrated them in. And I think one of the interesting parts about With Otis is that they basically same model, Reg A. In general, I don't want to speak to every offering, but to my knowledge, that's what it is. And yeah, I mean, in a perfect world, I would hope that I'll call it like secondary market trading of mansion assets doesn't have to be a mansion product that we have to build. So, like, if Public is willing to kind of onboard our assets to allow their distribution for buying and selling, that's a lot better model than because for sure one challenge with real estate investing period, not just on mansion, is liquidity. Or like generally it should be a long-term investment, and that's where you'll get the biggest benefit. But I think we are able to model out what I'll call like cap rate based pricing, that is, should allow someone to sell their share next month and get a profit or maybe a loss. But to make that two-sided marketplace, you need both sides and you need a decent amount of volume, right? So I like, yes, long story short, hopefully Public or Robinhood or other platforms that have kind of trading models is a place where we could have secondaries for mansion.
Interesting. And just given the exposure to prop tech, to fintech, to digital media, kind of to all of the different types of businesses that you've seen over your career, are there areas today that you're just really, really bullish on outside of obviously what you're doing with Mansion Group? But are there areas of industry that you're just excited about?
And if not bullish, just more like intellectually, just like interested about.
Yeah, I mean, I think you'd be stupid not to be diving deeper into the AI space and kind of how it can apply to the worlds that we know. I think some of the stuff you guys are doing in the ad tech side makes sense, a ton of sense to me as somebody who dealt with the pains along the way and the potential for upside. So like that's one I'm watching pretty closely. I think the other part that we haven't talked a lot about that we're interested in is just like this concept of I'll say like access to markets. I think real estate is just one of them, but other places I'm investing. I like the Masterworks model. I like this idea of democratization is probably like overused, but I think there are fintechs, whether it be PropTechs or others, who are figuring out ways to say, like, why are only the wealthiest people in the world able to buy like, this type of asset and profit from it? And I think the regulatory environment is flexing crypto and some of the things there now that we're past like the folks taking advantage of that. I think you're seeing some real innovations. That's one. I think the other one that I'm pretty bullish on is just I'll say like blockchain type solutions or solutions that take like antiquated processes that still haven't moved digitally, and make it a lot easier to transfer them, package them. And so I like that's a space that's very, very niche, but I think super valuable for massive banks. Like I think what Provenance blockchain, if you guys don't know Provenance, it's like Figure and Mike Cagney's startup kind of launched Provenance, but like they're helping some major banks. So we're participants in a very small way, but I like those types of solutions because I think basically what you're saying is, can we use technology to make things way more efficient, and then secondarily, can we be really creative on like how we monetize these assets instead of feeling like we only have one way to do it. My hope is like eventually Zillow calls us and says, hey, like we have whatever it is, 2 billion people visit the site a year and only 4 million real estate transactions happen in the US. Like, so for everyone else, we'd love them to be able to buy a share of real estate instead of, just come and dream. Like maybe they can dream and participate along the way. And so like, it's not just my space, but I have this probably stupid mantra that like, I just want to invest in companies and products that like make people happy. And things that make you happy are pretty easy. It's like take the shitty work out of my life, or like make me more money. And like if you can accomplish one of those two things, I think it's an attractive investment.
Yeah, and you talked about the blockchain kind of aspects. Did you guys ever think about like going all like kind of all in and trying to make this like a DeFi play, and or was that just kind of too far out there?
No, I mean we were very, very close to launch. There's a company called Lofty who had done it before us, and basically is not registered with the SEC. Um, and like I had enough friends between folks at General Atlantic and Silver Lake who were like backers of Red Ventures who had seen a lot of the crypto space, and I think their lean, and probably rightfully so, is like if you build it all unregulated, just assume eventually you're going to have to do it in a regulated way. So unless there's massive, first mover advantage to get there, you're probably better off, doing the regulated way, and you can still make it crypto behind the scenes if it means like, that those technologies add a ton of value. And so like we are distributing our assets on the Providence blockchain, like as a way to represent them natively and digitally. But the concept there is just like optionality more than it is like fundamentally changing our business versus like Lofty. So like as it relates to crypto and DeFi, I think for Mansion, it didn't make a lot of sense for us to pursue a path where we were avoiding kind of the regulatory scrutiny of the SEC. And so we leaned pretty hard into like trying to do it in the way that, I don't know if there's a right or wrong way, but in the way that like we felt most comfortable. And I honestly think like my bet was we needed to build trust as in our brand over the long term. And I want to build this, hopefully as a company that, can outlive me. Doesn't mean I have to be the principal in it the whole time. But, and so I think, doing it through the SEC, regulating it, I'm sure there's a decent amount of kind of the Web3 folks who are like, oh, you're stupid. You wasted a ton of money and you could have done it this other way. But there's a lot of other folks who for the first time and them trusting us with their money, I think feel more confident that like we went through that process and that they have access to the information and the governance, or at least regulatory oversight of the SEC. So long story, we looked at it. I think it's a small part of the back end of our platform, but it's, we decided against kind of the path of least resistance.
Well, John, I think the Mansion Group sounds awesome. I think as we close out, where can people learn more about Mansion Group, you, and is there anything else you want to plug?
No, I mean, listen, if any of your listeners are probably like I was and, are exposed to a lot of different things in their portfolio, but maybe aren't invested in real estate, like I'm happy to take a personal call with them if they want to invest in our REIT, which is for accredited investors, so kind of higher net worth folks. Or anybody can check out the site it's just mansionlife.com. You can see properties that we have available for investment. The minimums there are $100. So check it out, dabble in it. And then obviously anybody who wants to stay in Charlotte or Deerfield Beach right now, like you'll probably find us on Airbnb, or you can check us out on the site and book a stay with us. So whenever you and James come to Charlotte, I got you.
Awesome.
Appreciate
Thank you.
it.
We'll make sure to put all that in the show notes. Listeners should definitely check that out. John, this was great, man. Thank you so much for joining us today.
Yeah, appreciate it. Thanks, Daniel.
Yeah.
Thanks, James.
Yeah, thank you, man. I really, really appreciate it.
Before you go, we need your help. If you enjoyed this week's episode of Taking Inventory, then subscribe or rate wherever you listen to the podcast. And while you're at it, please share this episode or your favorite episode with a friend. We'll be back next week with another episode of Taking Inventory. See you then.